I'm starting the recording. Okay, everybody. Hey, all right, give you the initial sign off, right? I got to do the hand wave. Rick, bear with us. We get a little silly in the beginning because life's, got to go on to some point. So here we are, gang. We're going to go live just a little bit early because I think we have a lot to talk about. There is a lot going on in the world right now. And I've got probably one of the best experts we can get on for this. Mr. Rick Sanborn from Seacoast Commerce Bank has joined Matthew and I, and we're going to be talking a lot about the SBA stuff. We're going to be talking about the newly passed stimulus bill, which is literally minutes old to this point. Here we are, almost 4:30 Central Standard Time. So we're going to kick this off early and get this thing rolling because we have a lot to bring up. I mean, Rick's going to be the SBA expert, and Matt has done a couple SBA loans. So we really want to spend some time on that and then talk about the banking world and how it relates into the property management realm. And I wanted to say thank you real quick to Allison DeSaros to getting an esteemed guest like this on our show, on the program to give us a daily update. Mr. Rick, how are you today? Please give us an intro.
Doing really well. Really glad to be here. Obviously a lot going on in the marketplace with the stimulus bill, SBA programs, relief for consumers, relief for businesses. So it's a very timely episode. I'm glad I could be here to provide some insight.
Yeah, we're pumped. We've got a real CEO. Brad and I, we call ourselves CEO, but now we've got a legit CEO on the show. So thanks for joining us. Go ahead, Brad.
My personal title is High Chancellor Extreme Commander. That's what I typically call myself around the company. But once I leave the house, it all goes out goes out that window. Joking aside, so seriously, what happened in the last few minutes? President Trump has now signed the stimulus bill. It is going to go into effect. A lot of us have to go read some of the stipulations in there. But Rick, if you can just give us a few minutes of kind of what you have seen so far in the initial part of this, and we can start to maybe ask some questions and see if we can kind of get some information out to other property managers on what's going on with the stimulus bill, how it relates to SBA, the banking world, et cetera. So please go.
Sure. This is actually stimulus bill number 3. There's been 2 ones prior to this. So I want to go backwards just a little bit to stimulus bill 1, which was an $8 billion stimulus. And part of that, which is important to business owners, is some economic relief. So in stimulus bill 1, there was a chunk of money set aside for what's called the SBA Disaster Injury Relief Program. There's a lot of SBA programs that are going on right now. And I want to make sure your folks understand the differences because they're all slightly different. So under the original disaster relief program, that is a lending program that is administered 100% by the SBA. Banks have nothing to do with those programs. We do have a link on our website for that specific program, and it is involved for if people have what they call an injury as a result of COVID-19. Businesses shut down, any various things that have happened, they can go and apply for a economic injury loan direct through the SBA. There are some criteria, but it can be used to help cover expenses that have occurred as a result of this virus. So that's one program, and that's been in place now for a couple of weeks. What was signed into law today was stimulus bill number 3. And within stimulus number 3, again, there are many provisions in there to help businesses get through this situation. What's most important under the SBA program are really 2 provisions. Number 1, if you are a business now that has an existing SBA loan, you can qualify, or you are going to automatically get a 6 months of your payments covered by the government. So just past today, it's going to take up to 2 weeks to get this all implemented, but as part of the economic relief package, every single SBA loan in the country, and there's about 250,000 businesses that have SBA loans today, the government is going to make your payments for 6 months. So again, that'll probably start with I'm going to say the May payment. Because by the time this gets implemented, we're going to be a couple of weeks into April. So for your May payment, possibly your April payment, the government's going to pick up your payment for 6 months. That's great. It's going to get, go ahead.
Great stuff, Rick. Let's touch on that with Mr. Matthew, as he has several SBA loans. So this is really affecting him right now. Talk to us about that.
So Rick, when this first happened, I reached out to our bank immediately, and what they said is, hey, all you need to do is pay interest for the next 3 months. But what you're saying is I probably need to reach back out to them under this new, and when should I do that? And what should I basically say when I reach out to them?
Okay, it's kind of a two-step process. So you reached out to your bank before this was already done. And what the bank's basically doing is giving you either what's called a deferment or a modification. So they're saying, just pay interest for 3 months. We're doing the same thing for our loan customers. We're saying, look, we're going to defer your payment for 3 months. So there's various things that banks are doing on their own. This payment by the government is completely separate. So let me give you an example. So your bank said, just make payments for the 3 months. So they are modifying your loan for 3 months. After that 3 months, that is when the government is going to make your payment to the bank on your behalf directly. We don't have the specifics or the mechanics of how that's actually going to happen, but that should come out in the next 10 to 15 days. But what will happen is the government will pay the bank directly on your behalf for the next 6 months after your 3-month deferment is up.
Rick, if you were standing right here, I would kiss you. So let me kind of understand it even better. Is there something that I'm going to need to do if I have an SBA loan, and there's probably people listening to this, to initiate that, or is the government going to automatically do that on my behalf?
Government's going to do it automatically. Now, again, we don't have all the specifics, but the way that we understand it, the government is going to make 6 months of payments for you. You should not have to do anything. And that's for every single SBA loan in the country. And there's 250,000 of them today.
Wow.
So that's
we can wrap the show up right there. I've gotten everything I need. That was awesome, Rick.
Yeah,
I did not even know
floating.
that. Like this is absolutely brand new news to me. I'm so excited. I can't stand it. Drinks for everybody.
Yeah, that's really good news for him.
Rick's not even done. He's got more for us.
I know he's got more, but I got to dwell on that point because Whitaker is now like dancing on air over this one, because this is going to help his business stay alive, help him maintain payroll, not have to lay off any employees.
To be clear, this is about $300,000. I just found out I'm going to be $300,000 richer.
That's great.
Yeah. Rick, when I see you next time, drinks are on me, buddy.
All right, well, let's talk about the next part, which is really specific about your payroll. So aside from this 6 months government taking care of your payments, there is what's going to be called, I'll call it the forgiveness loan. So aside from the economic disaster loan, in this bill, there is a forgiveness loan. And what the government's trying to do is incent businesses to get their employees back on the payroll, or just be able to cover their payroll for the next 2.5 months. So the basic parameters of this program are, you take your monthly payroll, you can take your payroll for the whole year, average it, that's 1 month's worth. You can get the loan under this new program for 2.5 times your monthly payroll. So if your payroll was $100,000 a month, you can get $250,000. What the government's going to say is, if you use that money to pay for payroll, benefits, utilities, rent, you can apply for forgiveness, and the government will forgive all of that money.
And that is going to be through a bank. We're going to have to go to our banker like Seacoast Commerce and initiate that.
That's correct. That program is going to go through the banking system. Now, that's still being developed. Again, it's going to be a couple of weeks before that's actually being rolled out, but that will be something that we do as an institution. So you've got just the regular deferment. Hey, just hold off on your payments for 3 months. We do that. There is the economic relief program through the SBA. Then there is this payroll program, which the banks will also do. Now, there are certain caveats. Number one, the business has to qualify, and that's a size restriction. So it's only eligible for business that have less than 500 employees. That's kind of the big hurdle. And then as far as your payroll, there are limits on what you can include in that payroll. What they're saying in the bill is anyone who makes up to $100,000, that can be included in the calculation of your monthly payroll. If you had one employee who made $1 million a month, that's not going to fly. But it really is trying to get to the lower level lower paid people to make sure they can get taken care of, if that makes sense.
And talk about that. What if you did have, let's say you had somebody at 120,000, would you get credit up to 100 for that 120, or is that whole 120 thrown out the door?
Up to the 100.
Oh man, golly, this can't get any better.
No, that's great information. Wow. Keep going.
Yeah. So if for some reason you don't want to use that money to do payroll, and some companies may decide that they're not going to be able to bring back all their employees. Let's say you only half of that goes to bring employees back on the payroll. You can still have the rest of the money, and the government will make that into a 10-year loan at 4%. So there is a requirement that it's just based upon payroll. If you don't use it, that's okay. It cannot be forgiven. They'll only forgive the portion that was used for payroll, benefits, utilities, rent. If it's used for other purposes, you can still have the money. It'll be paid out over, you can pay it back over 10 years at 4%. So they're trying to make it as beneficial as possible for businesses to get this money to get employees back on the payroll. Now, here's something to also know. A lot of businesses have laid employees off. That's okay. You can still apply for the money based upon historical payroll, and the intent is to bring them back on.
That's incredible. One of the things that I heard, his last name is Munkin, is that correct? Say, did I butcher that?
Yeah, Mnuchin, Secretary Mnuchin.
Thank you. He said that he wanted to make it really easy on the banks to essentially provide these loans. So, you know, one of the things that everybody, it's renowned that the SBA process is a lot of papers, a lot of reporting, but this is going to be a little bit easier though, right? It's going to basically require you, the bank, us to basically supply you payroll and prove it, and then maybe 1 day type turnaround on these loans?
That's a very good point. That's what they're trying to get figured out right now. So between the Treasury Department and the SBA, they have to get to us, the banks, what are the procedures? What are the qualifications? What are the documents? What are the requirements? But what Secretary Mnuchin has said is this needs to be simple. This needs to be a process where banks can get money out to businesses within 1 to 2 days. So I envision a very, very short application, which to me is just going to say, you're going to certify, do you have less than 500 employees? Is this the amount of your monthly payroll? So you're going to be saying, yes, I meet the limited qualifications. This isn't a typical underwriting loan where I need to say, can you pay it back? So we're not sure whether we're going to require any financial information at this point. There's no collateral, there's no personal guarantee on the forgiveness part. So it should be very, what we call document light, and very quick for us to say, yes, you qualify, you've certified, we'll get a document out to you, hopefully electronically via DocuSign. You sign it, we fund the money. So that's what the intent is. We have 10 to 15 days to kind of figure out how that's going to actually work.
Rick, what about a lot of the property management community is very small, like they have small offices with maybe it's like an operator, a person that owns the business with 2 people that work for them. Obviously, the 2 people account for payroll, but typically the owner is kind of like a self-employed person. Is there any way to get that self-employed, maybe they pay themselves over $100,000, but that $100,000 accounted for in the payroll? Like, I pay myself like a guaranteed payment every month. Is that going to be part of the calculation?
Yes, in the actual bill, there are provisions for self-employed people. So that is part of the process, and there is a way to get that captured as to how much that equates to.
Yeah, awesome. So I've got another question. It's going to it's going to compare the 2 loans against each other, because number one, you can't get both, right? You can't get the payroll loan and the disaster relief loan. Is that correct?
Correct. Yeah. If you've applied for and received the economic injury or the disaster relief loan, then you cannot get this payroll forgiveness loan.
What would be a scenario, because the disaster relief loan program goes up to $2 million, is that correct?
Right.
And
yes.
So how do they account for the amount of money you would be available to get under that loan program? In other words, if I said, hey, the $250,000 is not enough money for me. It doesn't account for what I've lost. Let's say I own a restaurant, but what if I wanted to go for that $2 million? What would I have to prove to the SBA?
Yeah, since that's a process that goes 100% through the SBA, banks don't have any say in that. I'm not 100% sure what the criteria are, but you will have to prove up what your so-called damages are, what the economic impact is. That does go up to 2 million. That is specific to your damages, if you will, or how you've been impacted.
Yeah.
And that's through the SBA program.
That's what's so hard. You need the money before you get completely damaged, so you don't really truly know what the forward-looking damages are.
Right. And I was going to say that there are other programs in the works. This particular stimulus bill 3 is not going to be the last stimulus bill.
Oh, wow.
They're working on stimulus 4 and maybe stimulus 5. But something that the Federal Reserve has mentioned, and this is public, so I can say this, is they are working on what they're calling the Main Street Funding Facility, trying to provide other mechanisms for businesses to be able to get assistance, because you talked about, you don't know today what your total damages are going to be, because maybe your restaurant's only been closed down for a month. How long is this going to last? We don't know yet. And this this forgiveness loan is for small businesses for a certain amount. So the Federal Reserve is trying to come up with, and they're still at this point where they are still in the development stage of how do we come up with that next buffer to, if we have to top off the need of businesses. Again, they're still in the planning process, but they are working on that today. So I think you're going to continue to see multiple facilities where businesses can hopefully get the resources to get back on track.
Yeah, because the challenge, Brad, is, we had somebody that did a lot of short-term rentals. Anybody that's in the vacation home property management, all the spring break business that they were planning on getting, all canceled at once. And so I have friends down at the coast that own property management businesses down there, and they're just hopeful that all this loosens up by Memorial Day, because you really get into their season of where they met, because their revenue cycle is very heavy in the summer. And so they don't know they know they're having an economic impact now. They just don't know what the forward looking in it. So you would hate for somebody to essentially get this payroll loan and then be stuck and lose their business because this just doesn't cover all of their losses. So that's why I asked the question. So my next question would be, if I'm sitting here evaluating these two, what would, and you may say, well, that's a better question for you to answer, Matthew, but what would be my reason for picking number one over the first disaster relief program loan over this payroll loan?
Honestly, I would go for the payroll loan first because of speed. The disaster relief program, again, through the SBA, it is being very heavily used right now. I think the process is going to be slower than people think, where the intent behind this immediate payroll system forgiveness loan is to get money out as quickly as possible.
And so you're going to wire me and Brad our money right after this thing, Rick? We're ready?
Oh, yeah. Yep, got it all set up, ready to go.
Just got to hit send.
Hit send.
So another thing that, does the term EIDL ring a bell to you, Rick? EIDL. It's like a $10,000 grant that's a piece of one of these loans. I think it may be a piece of the first disaster relief program. Yeah.
There are multiple loan programs under the disaster relief bill, under number 1 and number 2. I was actually looking for, somewhere I know I've got a copy of what that all entails. There are multiple aspects of it. I'm not familiar with that one.
That's okay. I know it's so new and there's so many different things. So I appreciate, what you've told me so far is more than enough. Super pumped about having some help. Brad?
Let's talk about some of the ideas of what you've learned from where we're going with the regular owners of homes and in the banking industry. So a couple different things, like you have current existing landlord owners who might own a non-primary resident home. Do you see any relief there? And also, do you see any new programs or other programs where people can buy more rental properties to develop affordable quality housing? Is there any talk about that type of stuff?
There's nothing on the development side at this point. That's probably further down. Right now, the main focus from the whole government is how do we get money into consumers' hands and small businesses to keep their people employed. That's the main focus right now.
Okay, because we're trying to think on behalf of our landlords, because we want to understand if it is a trickle down effect. We talked about this, where if the landlords have their mortgages, or the mortgage company says you don't have to pay for X, it's almost a trickle down to where they can go to the tenants and say, okay, we can rearrange your loan payment for your lease agreement for X. I mean, it's a trickle down because we as property managers, we're stuck in the beginning of that, kind of in the middle of it, to where we have to attempt to collect as much rent as we can, because that's what we are hired to do. We are rent collectors, money managers. And so we have to kick that up to the owners so they can potentially pay their mortgage if they have a mortgage. And so that's kind of where I'm asking that question to see if you've heard anything about the talk on that regard and can offer any insight. But if it's too early to tell, it's too early to tell.
And Rick, you may not be able to answer this question yet, but let's say you were the bank, Seacoast. Do y'all do investment loans for individuals that own rental homes? I mean, what if they called you up and said, hey, look, my tenant's not going to be able to pay for a month or two? Not holding you to this, but I mean, banks are willing to work with people right now because this is kind of a short-term cash flow issue, right?
Correct. Yeah, we all are. I'm sure every bank. I have a brother who owns rental property or commercial properties, and I've told him, call your bank. Every bank should be willing to defer your payments for up to 6 months. Now, some banks are starting 1 month at a time. They want to see what happens. We're doing 3 months to start for all of our customers that call in that say, I need help. We're deferring payments for 3 months. I will say that the regulators, again, to help banks out, have given us guidance that we can defer payments for up to 6 months and not have to classify that loan on our balance sheet as troubled. That's a big thing in banker world and our speak is once we have to classify a loan as troubled, it triggers other things that we have to do. And our regulators are saying, look, help out your customers, help out the economy. Defer up to 6 months. You don't have to consider it troubled, even if they don't make their payments. So for all of these property managers or the owners of the properties, they should absolutely be calling their bank and saying, I need some help. Can you defer my payment for 6 months? It might get 3 to start, go 3 and 3, but banks should be willing to do that. I know that we are. Anybody who calls, we are doing those deferments.
Would you recommend that for the management companies that have the rent? Should we be calling our landlord and asking for that and see where that goes?
As a tenant, that's between you and the landlord. I mean, if I certainly believe that tenants all across the country are saying, I'm not getting paid, whatever the situation is, I can't pay my rent this month. That is happening everywhere. But I would advise all of the owners, the property owners, to call their banks and say, I need a deferment for 6 months.
So one of the big issues right now is we all feel the stress, like, oh my God, we're going to miss out on this money. When is the appropriate time to, let's say we wanted to go with the payroll loan, when's an appropriate time to go ahead and reach out to our bank and start the process?
With the president just signing the bill today, it's going to take about 2 weeks for us as an institution to get the procedures and the requirements to be able to actually process those requests. We are getting hundreds of requests already every day. And all we can say is, look, hold on, we have your name, we know. As soon as we get the information, we will be sending that out to all of our existing clients. We'll have it on our website on here's the process. Here's the form you got to fill out. Here's what we're going to need from a documentation standpoint. We just don't know yet because, again, until the bill was approved, they really couldn't do. We know the SBA has been working on this, so they are already prepared and working to get that out, but it's just the government. It's going to take a week, 10 days, 2 weeks before we will have everything ready to go.
And what would be, we don't need to be standing on your doorstep Monday morning when you show up to work, but what would be a good, when would we know that banks are ready to start giving those loans? What would be a good thing to wait on?
Yeah, for us, on our website, we actually have 2 blocks. One of them is going to be for the forgiveness loan. One of them is for that disaster recovery loan. We already have the disaster recovery loan link up there that doesn't involve us. It goes right to the SBA. But we will have that on our website. We will go through social media. We will be posting that We are now able to process these forgiveness loans. That's something that once we send it out, we obviously will send it to all of our employees. So like Allison, she'll know when we're geared up and ready. She can get that to you. You can put it out over your social media for all of your contacts.
Okay, so let's talk a little bit about some of the banking stuff here on a different plane. Is new lending going to be still happening? Is it like on the back burner for 90 days? I mean, what do you think of new lending in case there's opportunities for Matt and I to potentially acquire other management companies who are ready to go out of business? I mean, we may have to help other PMs keep their payroll and their staff alive in certain situations. I mean, just talk to us about that if you even know.
We are absolutely still open for business. We are still funding loans. We still have loans coming in. I mean, it certainly has dropped off some as borrowers have kind of stepped back a little bit and taken a pause, but it has not stopped what we're doing. We're still very anxious. We're still very willing to go forward with our traditional loan programs. So for some property management companies, there are lines of credit that they get established so they can go buy other management companies. That's something that we've done as well. That's a nice facility to have in place. So if there is the opportunity, you're prepared to go forward. But no, I would think that most banks at this point are still very eager in lending. It's a matter of it's not a supply issue, it's a demand issue. Where do people really want to borrow today based upon the conditions that they are in?
Let's say if we already talked, I already have a couple of SBA 7A loans. How is the SBA going to view that? You know, there's a cap of $5 million that you can get guaranteed by the SBA. How are they going to view, the first stimulus loan, or even the 300, not $350, the second loan, the third stimulus package loan? How are they going to view that in light of that $5 million cap?
Yep. The original stimulus one, the economic impact loan or disaster relief loan, completely separate from the SBA 7A program, does not affect what the government has authorized us to do under that program. So that by itself. Under this $350 billion 7A small business payroll forgiveness loan, it is being processed through the SBA 7A program, but it again is completely separate pool of money so that it doesn't affect the normal SBA 7A program. Just to give you some context to what this stimulus 3, the size of it is, the normal SBA authorization on an annual basis, I'm going to use round numbers, $30 or $32 billion. So you want to apply for an SBA loan, the SBA has 30 plus billion of authorization every year to do loans. This salary forgiveness, payroll forgiveness program is 350 billion. It's 10 times the normal annual SBA allocation of funds. So it's pretty substantial. Now, having said that, we do believe that money is going to be pushed out pretty quickly and it's going to run out.
So act quickly, but not too quickly to get that money.
We are expecting a very large surge of people that want to get it as soon as possible, because this is the critical need right now, guys. I mean, you've got businesses that can't make payroll, and you can't wait 6 months for that to happen. This needs to be a process where we can get it out to our clients and the small business community within 1 or 2 days once the program's up and running.
Talk about why is it's going through banks, but it gets forgiven. So the bank's not going to get the interest for that loan. Talk about why a bank would do that. I know it makes sense for the government because you're at the local level, you can get it done a lot faster, but what's the benefit to you for doing it?
We will get paid. We get a 5% fee for doing the loan to handle that whole process.
Gotcha.
But you're right. As soon as you get the loan, you're going to want to apply for the forgiveness so that it's gone. So yeah, this isn't something that we're going to get a lot of interest on. Actually, I don't claim we get any interest on it, but we're getting that 5% fee to cover our overhead to get these loans out.
That's great. That's
Now,
great.
there is a portion, if not all of it is used for payroll, benefits, utilities, and rent, that part can be amortized out over 10 years like a normal loan at a 4% rate. So banks that still have that piece, if people come and they want to not use it for payroll, they want to use it and keep it, then there is the opportunity for banks to put some earning assets on their books. But I think most of this is going to be, I'm using it for payroll, forgive the debt.
Yeah. So in other words, if I borrowed $200,000, but I used $150,000 of it for payroll and utilities, you would amortize the $50,000 over 10 years at about 4% interest.
Correct.
Yeah. Awesome. The other thing that we need to get into, because we're running out of time, is you're also a member of the Federal Reserve. And you said you might have you just got off a conference call or whatever, and they have some kind of some things that you could share with us that may tell us what's next, what's forward looking.
Yeah, I did get elected to the board of directors for the Federal Reserve Bank of San Francisco. So you have the board of governors. Underneath the board of governors are 12 independent Federal Reserve banks or districts. Each district or each bank has its own board. So I was elected to the board of directors for the San Francisco Federal Reserve Bank.
Awesome.
I tell you,
congratulations.
It's been super cool. I guess I should probably say at this point that anything I say here are my own views and not those of the Federal Reserve.
Right.
Add that disclosure in there.
We have to say that all the time with Brad. So it's definitely his own views on this show.
Right. It's been a tremendous experience so far, even though it's only been 3 months. Just the people I get to interact with. We have been having twice a week updates for the board of directors on what's going on in the marketplace. And to get a sense for what the Federal Reserve is trying to do here is just amazing. They truly are trying to pull out all the stops and do everything they can to get the economy stable and get it back on track. They have 2 mandates by Congress. One of them is full employment, and the second one is stable prices, which means, in essence, get inflation to 2%. Well, we have been more than full employment up until about 3 weeks ago, with the unemployment rate being around 3.5%. With what I'm sure people have seen on TV, 3.2 million of people applying for first-time unemployment, the unemployment rate at the next cycle is going to be double digits, 10, 12, 15, 30. It's going to be a big number. So the Federal Reserve is trying to fulfill that mandate of how do we get full employment, meaning get people back to work. And they are doing everything they can to keep liquidity in the marketplace. Something that maybe not a lot of people think about is, you go to your bank, you cash a check, you go to the ATM, you get cash. Well, for businesses, they have to have that same ability to go to their, what they call ATM, and get cash if they need it to make their payroll. In crisis, systems freeze, and businesses do not always have access to cash. So the Federal Reserve has been pumping massive amounts of liquidity into the system to make sure there is always cash available. So hearing about, and a lot of this is all information that comes out, all public information about what the Fed is doing. They are taking very unprecedented steps to ensure that the financial system stays functioning properly with sufficient liquidity so that businesses can continue to operate. It's been a wonderful experience for me.
Well, I'm a reader of the Wall Street Journal, and they were very complimentary of the Federal Reserve and their actions that they've been taking, way more complimentary than Congress. They were very disappointed in Congress's response, but said that if it had not been for the Federal Reserve's actions and the quick actions that y'all are taking, that the financial impact could have been way, way, way worse. So kudos to you for acting quickly.
Well, I'm just kind of a board member like all of us. I sit there, I listen, and provide guidance when I can. There's a lot of staff members, been there forever, that are just wonderful people, and what they do for the country is amazing.
Yeah, well, Brad and I couldn't even get elected to our own HOA board. So the fact that you're on that's pretty darn impressive. Well, Brad, do we need to wrap this thing up?
Yeah, we probably want to. Rick, any parting comments or stuff that we missed that you want to touch on? I mean, we don't really have a hard time, but I don't want to take all your time. I know you got other stuff to do.
No, I've very much been thankful for this. I will add one thing, because I've had several calls lately with property management companies, and what they've told me their concern is, aside from being able to make payroll, is the financial system's ability to have cash available. We have some large commercial property managers that their owners aren't getting rent. We kind of talked about that, and they're going to have to rely on their reserves in their banks to make mortgage payments. And the concern was, are banks viable today? Do we have the access to get them the cash that they need? I mean, if you think about it this way, we're a little over $1 billion bank. We have 950 million in deposits, and we have about 900 million in loans. We don't have 950 million in cash sitting in our vault. It's been given out in loans. Now, we do routinely keep between 50 and 100 million in what we call liquidity on our balance sheet, but that is a concern that hopefully management companies or businesses across the country don't have. Banks have ample access to cash. I talked about the moves that the Federal Reserve's working on to ensure there's liquidity in the marketplace. We have lines of credit just like you have a line of credit. We can go to other banks. We can go to the Federal Reserve. All in, we have the ability to go borrow over $500 million in cash if we needed it. Now, we won't need that. But the fact that we have that ability is what most banks have. So for your property management clients, for the folks within your organization, banks are very healthy. The Federal Reserve has done a great job to ensure that there is that liquidity there to meet the needs of our clients. So that should not be a concern. And I will add,
Excellent.
as part of the stimulus bill, they are increasing the FDIC insurance to an unlimited amount through the end of the year.
Yeah, keep going on that, because Allison mentioned something on that via email. Explain that fully, just so everybody kind of catches that one last piece.
Right now, FDIC insurance covers you up to $250,000 in your account. Now, for commercial property management, trust accounts are a little different because it's per tax ID number. So you could have 10 million, but if it's a whole bunch of people, it's still all covered. But for the normal individual and for businesses, 250,000 has kind of been the demarcation line. In this environment, what the FDIC is saying as a result of the stimulus package, unlimited FDIC insurance. So everything in banks is insured. Clients don't have to worry about, do I need to go to a different bank and move my money around for insurance? Everything's good.
This has been awesome. Rick, I can start sleeping again. So I think we lost Brad, but I want to tell you, thank you so much. I mean, I've had people calling me, asking me questions, and I didn't know the answers to them. And so I was able to ask the expert. And so you've done a completely awesome job of just filling us in. And I feel so much better. I feel like our government has really stepped it up and helped us in this, kind of crisis and time of need. And so I appreciate you being the voice, because sometimes it gets confused. The message gets confused, right? Like getting from government down to the regular people that need it at that time, the message gets confused. And so somebody like you coming out and telling us all this stuff has been very helpful. And the next thing I'm going to do is send the show to about 4 or 5 people that need to listen to it. So Rick, thank you so much for your time.
My pleasure. Anytime.
All right. See ya.
Thanks.